Goldman Sachs has just released its January 2025 update, and in it, it's also shared its US conviction list. So, the top stocks that they expect to perform in 2025, especially in January. And I am going to analyze those stocks. I've actually analyzed them, and I want to share my top 3 picks in comparison to what their top picks are for January 2025. They have some targets here in terms of the 12 months performance of these stocks. For example, Norwegian Cruise, one of the top picks that they have here is 36%, 25% for Belden Inc. And then Uber, they expect 59%. I looked at the whole list alongside everything else that they mentioned. And I wanted to break down what I thought out of all of these stocks were actually going to perform better in the short term. Okay, so fine. They're expecting let's say a 59% upside on Uber. I'm looking at which ones of these can I trade in January, in February, or March and make maybe 10, 15, 20% on. And there is a short list I've created. So here on the side, I've created a watch list of all those stocks. The first one that I really like here is Snowflake. And the main reason is we've had a basing period, we've had a breakout, we've had a uptick, so a move moving up, and this has been consistently moving up. Then a bit of a sell-off. Now I'm expecting a bit of a continuation here. And I like this because it's a software company, it's technology. I think it can do really well in 2025. And if you're looking at here, 16% to 190, the risk reward ratio is what I'm really looking at rather than the percentage gain. So if we do this risk reward analysis here, we have a 1 to 3, but potentially we can have a run all the way up here to 200 plus, right? So 200 plus will get you 1 to 5. So we have a 1 to 3 almost guaranteed here based on what we expect it will achieve in the next 12 months. But we also have a 1 to 5. So in the medium term, short to medium term, 1 month, 2 month period, I think this offers a better opportunity than some of the other picks that they've provided. Then we have Pinterest. And Pinterest is setting up really nicely. You'll notice here, as soon as the chart pops up, that we've had a long basing period here around these areas, around 28 to around $33. And around this $28 price, we are seeing multiple buy-ups by probably institutions as a demand zone and accumulation here potentially for a move up higher. Now, what do I expect with Pinterest? I'm probably looking at retargeting this area here. Recent highs in June, around 40, 42. This would give me a 1 to 4 risk reward ratio based on the data that I have right now. I could be entering a little bit earlier. I could enter a bit later, depending on where we are. But if we enter a little bit earlier, we get 1 to 6. In terms of percentage gains, 33%. So I think it can do probably better than some of the other picks that they have on there that they're predicting in 12 months they'll do 12%. So in a short to medium term, 1 to 2 months, I think Pinterest can do better than their picks like Uber and a few other ones. The third one is CAG. And with this one, I also like the fact that we've had this double bottom here and we've had a dip. Obviously, you want to be buying stocks at good prices. Now, you might not be buying them all the way down here like institutions are, but you might be able to capture some decent moves off those momentum plays from the buying up zones by institutions. So we have here demand zones being bought up over and over again, and then we have upticks. So if you notice, bought up, moves up, moves up, moves up. This one is around 15%, but the risk reward ratio is amazing. So it's a 1 to 5 hit. So if you're risking around 1 or 2% of your account, it depends on how risk averse you are, but you can risk like 2% of your account here. And if you have a 1 to 5, you're making 10%. So that's how I would play these 3 trades, these are my favorite ones. Now, if we go to Uber, their favorite ones, so the top performing stock is actually Uber for next year. I want to see where Uber is. Uber also is very interesting to me, right? With Uber, what we can get, and I think this is a nice area to start looking at Uber, is we could potentially get a 20 to 30% move in a period of about 1 or 2 months. Then how far this can go will obviously depend on the market and where it takes it. But in terms of where we are right now, Uber is providing potential upside for around 30% in the short to medium term. So maybe you could say this is the fourth pick for me. I'm doing this live. So I'm just analyzing live here. I'm not necessarily haven't looked at all of them one by one in detail. And the reason why I like Uber is we've seen a nice dip here. Okay, so we've seen this nice channel going down. Obviously, there's probably going to be fundamental reasons, but on a technical perspective, this is a nice move up. RSI was oversold. Probably what they're seeing as well as financial reasons and fundamental analysis. But oversold, there is still upside potential. We could probably get some resistance around 73 on this moving up higher if we do enter on the breakout. And then a dip and then a rise up to around 86 to retest this 86 zone, which was a historical zone for Uber. So if I draw this as well, we'll see that this is a zone that we might have to be very careful about. So around 33%, 1 to 4 on Uber. So still very good here in terms of the risk reward. 1 to 4 risk reward is very, very nice. You can, like I said, you can risk 2% of your account, depending on how risk averse you are. You can risk 1, 2, 5%, 2%. And if you're making that 1 to 4, you're making 8% on your overall account. Final one I wanted to cover was the Norwegian cruise line holding. The reason why I don't like this as much, I think a lot of traders, they like moves that have gained a little bit and then it dips and consolidates. The reason why I don't like it is because it's gained so much. So we've seen here a move of around, let's see, around 100%. And I'm trying to think here where the upside is and how much the upside is. What would be the reason behind it? It'll probably be fundamental reasons. I also don't like the way the chart moves. So yes, it can move up higher, but then it comes back down. And it creates these kind of volatile periods. So if we're looking at the volatility that's created previously, in terms of the ebbs and flow, you can see that it moved up higher here. Then what are we probably expecting in the short term? A move down, like every other move here before, after uptick. So we're also seeing the RSI slowly moving all the way down. If the RSI gets to low levels, like 35, 30, then I'd look at it. So as you can see here, RSI, every time the RSI comes to around 30, it's a good time to buy on this stock. So comes back down to 30 here. Potentially this eats around 50% of this move, so maybe around 21, and then we can get potential for a rise up in the stock price, but not here, not where we are in January right now. It doesn't really look that nice to me. I don't know what the financials are. I don't know what the fundamentals are, but on a technical perspective, yes, there is a wedge. It could break out, but it's just not looking as nice. Right, so that was it in terms of analyzing Goldman Sachs top high US conviction list. I gave you guys 2-3 ideas there that I really liked here. 1 or 2 of them I might actually put in my shortlist and trade in the next few months. So that was it. Make sure you guys subscribe and follow me on other social medias. I will be creating more content here. If you enjoyed this video, please subscribe. I will be creating more videos like these almost every day. And go and also follow me and join my Telegram group where I share these ideas before I even share them on YouTube. It's completely for free. The link is in the description. Until next time.